Hi everyone, it's Jack about another video, and today I'm going to be talking about AMD, doing a stock analysis, talking about its most recent earnings report which came out about an hour ago, talking about some valuation, whether I think it's a buy, sell and hold going forward. It's of particular interest to me because I believe this earnings report sheds a lot of light on Intel's absolute disaster of a report last week, which it blamed on cyclicality. I think this definitely shows that in a different light perhaps. The stock itself, AMD, is down 33, nearly 34% year to date. It's just shy of $100 stock. It's actually down after hours about 4%, despite this being a pretty decent report in my opinion, but we'll get into that in a minute. It's way off its 52-week high of $164, but it's also decently off its low of $71, so there's definitely been some nice buying opportunities recently. It's currently trading on a trailing PE ratio of 37, which is not objectively cheap, but it's growing revenue at an exceptional rate year over year, and its market cap is around $156 billion, which I expect to be significantly larger in the future. The high-level overview of this quarter is that revenue is up 70% year over year to now $6.6 billion. This is very slightly, I think analysts were expecting $6.7 billion, so very slightly below. Part of the reason why this is down 5% or so. Gross margin contracted slightly year over year to now 46%. Cash from operations of $1.04 billion, $906 million in free cash flow, which is broadly in line with expectations. And they repurchased $920 million in common stock. Strong revenue growth and decent cash generation. They're predicting revenue growth for the full year of around 60%, so at some point there is going to be a slight deceleration. Now let's dive deeper in and try and figure out why this stock is down slightly and what this means for the wider chip industry, AMD, and importantly Intel. So extremely strong revenue growth at this scale, growth across all segments, data center, client, gaming and embedded. Importantly, the embedded growth is absolutely off the scale because this is basically a new business segment for this company, and it's primarily the Xilinx acquisition. Gross margin down from 48% in Q2 2021 to 46% this quarter. They predict that with some amortization and acquisition related intangible assets. Now, I'm not the biggest fan of gross margin reductions by any means, but I don't think this is the end of the world. This is in line with Intel, or with AMD, sorry, its recent averages. 48, it's typically in the range of 45 to 50%, so 46 is not a bad number by any means and not something I'm overly concerned about as long as it returns to normal, which I predict it will. The first of the two segments that are easily comparable with Intel, because that's really what I'm interested in. I'm a fan of Intel. I think Intel is an excellent opportunity, as I am a fan of AMD, but it's no surprise to me that AMD are executing well. I want to see why Intel has done so badly, and is the rest of the chip industry doing badly? That's clearly not the case here. The data center segment, which is one of the most easily comparable to Intel's, was the star of the show here. Revenue of $1.5 billion, up 83% year over year. Microsoft Azure is deploying AMD Instinct M1200 accelerators. They had 60 plus new EPYC processor-based cloud instances across tier 1 customers. They're seeing really good adoption on an OEM basis. Really strong sales of EPYC server processors, 83% growth year over year. This is an excellent quarter for the data segment and they're predicting this to continue into the future. Operating margin increased from 25% last year to 32% this year. That's $472 million in operating income. This is really the complete opposite of what Intel was seeing. Intel saw a reduction in revenue, which they were blaming on cyclicality. Now, someone who is optimistic may say, well, maybe AMD was predicting well over 100% growth. I don't believe that. I think Intel's quarter just stunk even worse than they let on. AMD is clearly succeeding here and likely grabbing market share away from the likes of Intel. Growth in operating income primarily driven by higher revenue, partially offset by higher operating expenses. So they expected an even higher operating margin where Intel's was reducing dramatically. This is an absolutely fantastic quarter for the data center segment and just shows actually how bad Intel's were. It makes me really worry for that as a shareholder. The other segment that is easily comparable with Intel is the client segment, which was not as impressive. This is the largest segment by revenue, up 25% year over year to $2.2 billion. Still decent returns in what has been a challenging year for this business segment wider, as Intel definitely saw. $1.7 billion last year to $2.2 this year, driven primarily by rising mobile processor sales, the 7000 series desktop processors. HP and Lenovo launched 50 plus processor-based commercial notebooks. Dell also announced an AMD processor-based workstation, the first of its kind. They're doing really well here. Operating income increased 676 million versus 538 million a year ago, and that's an increased operating margin, which again is the opposite of how Intel was doing it on both of these segments. Intel really struggled. Operating margin decreasing, quarterly revenue decreasing, and this just shows what a bad quarter Intel was experiencing, or conversely how strong of a business AMD is. I think this is as much of a Intel stinks business case as how strong AMD is and how it is grabbing market share away from Intel dramatically, even though this segment slightly underperformed year over year. AMD is a company that is just continually executing. It has tremendous tailwinds behind it, of course, as does the wider semiconductor industry, particularly in the data center segment, which AMD has moved heavily into. But these sort of tailwinds have to be capitalised on in my management. AMD has excellent management and they are clearly capitalising on this. Look at that growth, significant revenue growth year over year. They're up 70% year over year, but from just Q3 2020, they're at $2.8 billion in revenue growth. What's that? 2 years later, not even 2 years later, they're now at 6.6 billion. Absolutely tremendous, particularly at this scale. This is not easy to grow the amount they're growing at, and they're just really capitalising on what is a great opportunity and outperforming the wider segment and crushing the rival is Intel, not particularly crushing Nvidia. That we'll get into that in a later video perhaps. But in terms of Intel, they're absolutely crushing them in terms of growth and new customer acquisition. One definite wrinkle with this quarter is the massively increased share count and therefore earnings per share dropping significantly from 58 cents last year to 27 cents this year, and that is primarily due to the Xilinx acquisition. Now this cannot be helped. This happens from time to time with companies like this. I think this is an excellent acquisition for AMD's future, and while I am broadly against massive increases in share count, I thought this was a reasonable acquisition at the time. They did it when the share price was exceptionally high compared to what it is today. I think that was an excellent use. I would much rather they do this than cash or loading up on debt. That was an effective use of equity at a time when it was very high, significantly lower now. So that Xilinx acquisition will look like a bargain on a share basis. However, I never like to see an increase in share count, and this is broadly not very good for investors. This resulted in a lower earnings per share, but free cash flow on a broad basis has continued to go up, so I'm not overly concerned here because I like the acquisition. If they continue to do this at a more quicker rate and invest in large companies, making large acquisitions with equity, then I'll be more concerned if they're doing it at lower stock price valuations. But right now, when the stock was right now at $99, I would be concerned. When it was $160, I wasn't so concerned. I thought it was a reasonable acquisition for the price. To summarise, exceptional revenue growth, exceptional gross profit, gross margin even reduced slightly, but gross profit is up such a large amount because revenue increased so dramatically. Operating expenses were up 151% year over year. That is to be expected in the current climate we're in. AMD is such a robust business at this point that it has fully absorbed this and is not suffering it by any means. Operating margin decreased quite significantly from 22% to 8%, but I think this will recover in the future. Once they've amortized all their intangible assets associated with the Xilinx acquisition, I think this company will return to normal levels of net income and things like that. And I think it will be doing just fine as an investment when on a comparable basis. Rather than analyse some more basic valuation metrics like PE and price of free cash flow, they're extremely wonky at the minute because of the Xilinx acquisition. So I'm just going to jump straight into the discounted cash flow analysis. And for this, I'm going to do a reverse DCF effectively because I think this gives the best picture of what you need to expect from AMD for this to be a fair value right now. At the current stock price for now $99, of course, it's going to be 5% cheaper at the market open tomorrow most likely because that's what it is right now after hours. This company needs a free cash flow growth rate of 20% and a terminal stage growth rate of 4% to be valued at fair value right now. Now, do I think it is capable of this? Absolutely. I think AMD has incredible secular tailwinds behind it. It has an excellent management team. I think Dr. Lisa Su is one of the best CEOs around and is typically voted as such in industry-wide votes. I think she has an excellent understanding of this industry and is really the absolute opposite of what Pat Gelsinger is doing at Intel. This is not a rebuild. This is pushing AMD further and further to the heights of its industry, grabbing market share away from the incumbents and becoming an incumbent itself. It's a fantastic company with fantastic management. I think it will have no problem generating between 15 and 25% free cash flow growth over the next 10 years, provided we don't go into a severe recession for the semiconductor industry, which of course is very hard to predict going out many years. But I think in relatively normal market conditions, this company is going to absolutely excel and grow free cash flow over the long term at excellent rates. So do I think it's fair value now? I think roughly. Of course, compared to Intel, looking at this quarter, I think it's absolutely no-brainer that AMD is a much better investment. I will most likely be selling some of my Intel shares because they've really let me down this turnaround, to be honest. I think Pat Gelsinger and the rest of the management team at Intel have really, really struggled to execute on the values and the plan that they're looking at going forward. And I just think there is a better place for the money, particularly in this industry. You look at AMD's report, they have crushed broader expectations because, well, my own expectations. I was expecting them to do pretty badly, if you ask me, because the wider semiconductor industry has been struggling. I thought the supply chain crunch would have hurt this business, and I thought big operators, big cloud operators wouldn't have been invested in much in the data segment, and I couldn't be further from the truth. This company has been performing fantastically and showing why it's an excellent company that many people own and many people would like to own. Now, would I like to buy this at a cheap valuation? Of course, but I think this is a reasonable entry point for me right now, and I'm going to be picking up some shares in the very near future. But of course, you should do your own research and due diligence, not just listen to what I say. If you liked the video, please like and subscribe. Comment down below what you think of AMD, what you think of Intel, what you think of the wider industry, what you think the buy, sell and holds are. Let me know what you think. I'll see you again next time.